Hey everyone, welcome back to the channel. If you've ever dreamed about becoming a millionaire through the stock market but didn't know where to start, today's video is for you. I'm going to show you the easiest, most realistic way to build wealth and become a millionaire in the stock market. And no, it's not about day trading or risky bets. This is simple, steady, and proven. Whether you're 20, 30, or even 50 years old, it's never too late to start. And the best part? You don't need a Wall Street degree or thousands of dollars to get going. So, what's the secret? The easiest way to become a millionaire in the stock market boils down to just a few key principles, and I'm breaking them down step by step for you. Why most people fail and how you can succeed. First, let's be real. Most people fail at investing because they chase quick wins. They buy the hype stocks, panic sell during crashes, or try to time the market perfectly. And guess what? That's the fastest way to lose money. But here's the truth. Building real wealth in stocks is about patience, smart choices, and consistent investing. It's a marathon, not a sprint. What you'll learn in this video series: 1. How to pick the right stocks and ETFs that grow steadily over time. 2. The power of compound interest and how to let your money work for you. 3. Building a diversified portfolio that minimizes risk. 4. How to set realistic goals and stay disciplined through market ups and downs. 5. Bonus tips on tax strategies and retirement accounts that boost your wealth. Imagine this, just $500 a month and your portfolio grows at 8% annually. In 30 years, you'll have over $700,000. Now stretch that to 40 years and boom, over $1.6 million. That's the magic of compound interest. Your money earns money and that grows exponentially over time. So don't worry if you don't have millions right now. What matters is starting smart and staying consistent. Now it's time for the big question. What exactly should you buy? Why picking the right stocks or ETFs matters. When it comes to building wealth, your investment choices matter. But the good news is you don't need to spend hours analyzing every company. Instead, focus on stocks and ETFs that have a proven track record of steady growth, good management, and strong market positions. Let's start with ETFs. Exchange-traded funds. Think of ETFs as a basket of stocks bundled together. When you buy an ETF, you own small pieces of many companies at once. This means you get instant diversification, which lowers your risk. Plus, ETFs usually have lower fees than mutual funds. Here are 3 ETFs that many millionaires have built their portfolios around. 1. SPDR S&P 500 ETF tracks the 500 biggest U.S. companies, diversified across industries like tech, healthcare, finance. 2. Vanguard Total Stock Market ETF covers nearly the entire U.S. stock market, great for broad exposure and long-term growth. 3. Invesco QQQ Trust focuses on the top 100 tech and growth stocks, higher growth potential, but a bit more volatile. Why blue chip stocks are a safe bet? Now, if you want to pick individual stocks, stick to blue chip companies. These are well-established firms like Apple, Microsoft, Amazon, and Johnson & Johnson. They're leaders in their industries with a history of paying dividends and steady growth. A simple way to start is a 70-30 split. 70% in ETFs for steady growth and diversification, and 30% in a handful of blue chip stocks for additional upside. Avoid these common stock market traps. Be careful of penny stocks and hype-driven hot tips, trying to time the market by predicting highs and lows, buying on emotion, fear, or greed. Remember, slow and steady wins the race. Open your brokerage account and buy at least one ETF like VTI or SPY. Start with whatever amount you're comfortable with. Even $50 works. Now let's talk about 2 game changers that help your money grow faster: dividends and tax-advantaged accounts. What are dividends and why they matter? Dividends are basically the company's way of sharing profits with shareholders. When you own dividend-paying stocks or ETFs, you get regular cash payments, usually quarterly. This is extra money that you can either spend or, better yet, reinvest to buy more shares and accelerate your growth through compound interest. Reinvesting dividends, your secret weapon. Reinvesting dividends means automatically using your dividend payments to buy more shares instead of cashing out. Over time, this can make a huge difference in how fast your portfolio grows. For example, if your portfolio averages 8% annual return, reinvesting dividends can boost your total return to closer to 10% or more. The best dividend ETFs and stocks to consider: If you want to focus on dividends, here are some solid picks. Vanguard Dividend Appreciation ETF focuses on companies with a strong history of increasing dividends. Schwab U.S. Dividend Equity high dividend yield with solid fundamentals. Blue chip stocks like Coca-Cola, Procter & Gamble, and PepsiCo are famous for reliable dividends. Tax-advantaged accounts. Now, let's talk taxes. Because what you keep is just as important as what you earn. In the USA, the two best accounts for stock market investing are the Roth IRA and the 401k. Why Roth IRA is a millionaire maker? With a Roth IRA, you invest money after taxes, and your investments grow tax-free. When you retire, you can withdraw your money without paying any taxes. Imagine decades of growth with zero tax bite. That's huge. How 401k plans help your wealth. Many employers offer a 401k, sometimes with matching contributions, basically free money towards your investments.